Okay, I'll just touch on your previous comment first. Is that the reason that the things are getting worse and worse in the geopolitical arena is because the West is pushing them. They're pushing China, they're pushing North Korea, they're pushing Russia, anybody, Iran, anybody that won't buy into their narrative and won't be swayed by them and won't be bought off by them is being demonized by the West. So that's why the situation is as bad as it is today. That's why we are where we are today. And as far as precious metals, well, the fact of the matter is that since we went off the gold standard back in 1971, and we've had basically unlimited money printing since, what the U.S. Treasury Department, Bank of International Settlements, Bank of England, all the major central banks and banking institutions have had to do is they have had to basically suppress precious metal prices. I call them the big six commodities: gold, silver, platinum, palladium, copper, and West Texas Intermediate crude. They've had to keep those prices pretty much under wraps. And they've done that in the COMEX futures market, where the price of all these commodities are set. And this has been going on since 1971 or 1973 or whenever they started this. And it's been going on to the present day. And it's more than obvious. You just take a look at any gold chart. The price will be way up, and then an hour later it'll be way down. This has been going on, this wash, rinse, and repeat cycle that the banks go through in controlling the prices of everything has been going on for almost 3 generations now. And it's reached the point now where they desperately want to get out of it. And the banking system in general, it's mostly U.S. banks. I mean, Barclays is involved, Standard Charter's involved. I'm sure the French bank PNB Paribas is involved, maybe a German bank, but they're mostly U.S. banks. Citigroup, HSBC. Well, HSBC is a British bank, excuse me. Citigroup, Bank America, the big New York banking firms have been short these metals by just hundreds of millions of ounces for such a long time now that they're desperately trying to get out of these short positions. This has been going on for, for a couple of years now. JP Morgan got back out in 2020. Now the remaining banks are trying to get out now, and that's where we're seeing the gyrations we have and why prices have been so depressed over this period of time. And when it really got bad was, remember when the LME nickel scandal broke out?
Yes.
Where nickel all of a sudden, blew up the LME, and that was the day. And I follow silver analyst Ted Butler's work very closely. That was the day when the prices of everything peaked: gold, silver, platinum, palladium, West Texas, everything. And from that point on, it's been downhill. I think it was the first week of March or something like that. It blew up, and ever since that point where the banks looked around and said, my goodness sakes alive, if this happened in nickel, what is it going to do in silver, which is the most heavily shorted metal on planet Earth? Gold, platinum, whatever else they're short in, they realized that they could get hung out to dry, just like JP Morgan got hung out to dry on this nickel thing. So they've been scrambling to get out of these short positions, and the only way they can do that is to drive prices lower to force other people to sell to them, sell long positions so they can cover. That's why we're in the state we're in today with silver at, what is it right now? I'm looking at my screen. Gold's at 17.15, which is ridiculous. It should be five or more times that high. It should be around $10,000 an ounce. And silver is over 1841. It should be, conservatively, it should be 10 times that price.
Okay.
And once these banks have managed to cover as many short positions as they can, they will be able to stand back and let these prices rise. And Dave, I'll tell you, when they do decide to stand back, it's going to be a sight to behold, because prices are going to absolutely go to the moon. And that's why you haven't seen prices do what they should have done for the last, 50 years. They've been very, very carefully controlled. But there's an end game coming, and like you said, we both watch this market very carefully. And through my work, through my consultations with Ted, who's the real authority on the precious metals, you can see that their end game is coming very, very soon. And if you're not in on the day that it decides to erupt, you're going to be all the way out. So my advice to people right now is to please invest in precious metals or commodities sooner rather than later. Better to be in 3 days early than 3 days late.
And you say soon. What does that actually translate into? I know it's not something that you can call to the day or to the time, but do you feel that
No.
is weeks, months, a year? What are we talking about?
If the banks put their hands in their pockets right now, it would be over before the end of trading tomorrow.
Mm-hmm.
One thing that people don't realize, okay, is in the COMEX futures market, okay, there are no daily limits to how high the price can go. There are in other commodities like copper or crude oil or natural gas or cocoa or rubber or wheat or whatever commodity it is. Okay, once the price goes up,
there's a limit up. Isn't that what it's called?
There's a limit up. Thank you very much. That's much nicer. It's a limit up, and then trading stops. That doesn't exist in gold and silver, and it can rise by any amount in one day. And the reason that is, and Ted told me this like 15 years ago, he says about 25 or 30 years ago, that quietly the CME group or the COMEX changed the rule on that, but didn't tell anybody about it. And he found out about it. I don't know how he found out about it. You can go there right on the website, the COMEX website. There are no limits on gold and silver. Okay. So when they want these things to fly, they can fly. It can be over. Like I said, when it does come, it's going to come quickly.
Yes.
And you better be in 3 days or 3 weeks or I expect this to be over before the end of the year, to tell you the truth. Okay. On what day, what week, what month, I don't know, but I can tell you that if you aren't in before it, you're going to get left all the way out.
And do you think that this is an organized unwinding of positions, or do you think that they'll be forced to by events?
You just don't know what the banks are going to do once they get down to cover as many shorts as they can. They'll have short positions left. My speculation is that if there's any losses that are threatening to the existence, too big to fail, that the Exchange Stabilization Fund, Bank for International Settlements, will come in and bail these firms out, or maybe the Fed will. But institutions like Citigroup and Bank America and HSBC and Standard Chartered, British banks, these banks are way too big to fail, and they'll get bailed out for sure. But as for everybody else, they're going to be forced to cover it in a very liquid market. And my mind boggles when I think about what silver price is going to end up on the clearing event that's coming. But I can tell you it's going to be a very large